Hello from Trend Signal for our review of the data and events the week beginning the 1st of February, a new month. I suspect quite a few equity investors, fund managers were happy and glad to see the back of January as we start the new month today and this week. The first week of the new month heralds the release of a stack load of data in the markets and the all-important non-farm payroll on Friday. Certainly, the results of Friday very much a risk-on day. Japan and the Bank of Japan surprised the market with negative rates move. Global equities and bonds rallied sharply in response. The US Dow Jones putting on a close on 400-point move, which helped all other markets really. Which, having said that, it just reaffirms the view that markets are still in the grip of central bank support, really, with comments made by Mario Draghi regarding quantitative easing, the possibility of extending that in March. A dovish view taken by Mark Carney in the Bank of England just recently, helping those markets. And the Federal Reserve, although on embarking on its rate-raising move, as it were, there are feeling a view in the market that perhaps they may adopt a slightly more dovish stance, but we wait to see that. So over the weekend, overnight, we had some Chinese data out, manufacturing data. We go to Forex Factory and have a quick look there, and we can see the data that's come out. Let's just change that a little bit so we can just see the key events. That's good. So we can see the manufacturing data came out at 49.4, slightly missing consensus of 49.6. That's actually dropped to a 3-year low, and it's the record straight 6-month of deterioration, which is quite alarming, really. Other news out over the weekend: Brexit discussions, as the press have dubbed them, ongoing negotiations between Cameron and this European Council President, Mr. Donald Tusk. They're trying to resolve some outstanding issues, and they expect to have a draft deal that will be circulated to EU officials on Tuesday. That'll help sterling markets a little bit. Time will tell, as they say. Okay. Let's get back to the calendar. Apologies. So the Bank of Japan reacted in a very unusual, non-Japanese way by cutting rates in response to the weakening economy and strengthening yen, although they're not necessarily closely linked. The strong yen has been as a result of some safe haven flows in the midst of this Chinese-induced sell-off in Far East and globally, really. So what else is going on? Last month, well, despite that sharp pick-up in the markets on Friday, January was a bad month for equities. In fact, the worst since last August, and actually the worst start to the year ever, really. Markets tend to do well at the start of the financial year as fund managers plan their year ahead and have key investments to make. But January was marked by disinvestments, really, as traders and managers moved into the safe haven of cash and, as you probably have noticed, G7 sovereign bonds, a lot of those core bonds performing very well. The outlook does remain a little bit uncertain, although the markets were recovering a little bit first thing on Monday, but equities giving up some ground following the sharp gains on Friday at the end of last week. Okay, let's have a look at the data and events now, because there's quite a bit to get through. But what I'll do is I'll highlight the key ones, because there are quite a few out that aren't so relevant. Let's target the very relevant ones. We've already had the manufacturing PMIs out from China and in the UK. Our number surpassing expectations by some distance, 52.9 expected of 51.8. Anything above 50 is in expansion, so that's nice to see. And that was reflected in a pullback in gilts and a slight pickup in sterling. Monday afternoon, we have the ISM manufacturing PMI from the United States. 48.6 is the number there. Still below 50, so not hugely positive, but see how that number comes out. And Mario Draghi talks in the afternoon on Monday. One of two speeches, in fact. He is talking again on Thursday. This particular speech is at the 2015 ECB annual report before the European Parliament. That's in Strasbourg, and it can move markets, so be careful. Overnight on Monday night, Tuesday morning, we have the Aussie rate decision, very early morning. I don't expect many of you will be up for it, but nevertheless, it comes out overnight. We're not expecting any change. As with all these central bank announcements, it's the statement that follows, any statement or press conference, etc., where a lot more detail is provided. We'll wake up on Tuesday morning to find out the results of all of that, of course. Just moving on there, jumping to Wednesday, we have the services PMI. So having started the week with a manufacturing PMI, we then have the services sector PMI. Of course, services sector are a lot bigger than the manufacturing sector here in the UK, so this actually is a lot more important. And as you can see, 55.4, pretty much unchanged from the previous month. But looking at the manufacturing data, maybe we'll have a bit of a pickup there. Then lunchtime Wednesday, we got the precursors of the non-farm payroll data, this ADP non-farm employment change, which is the private payroll company. That's a good insight into what's happening in the employment scene, and that's delivered at 1:15 on Wednesday morning. It tends to be a little bit volatile, but you'll note the pullback from those very heady numbers the previous month. It's the same thing with the non-farm payroll on Friday, quite a bit of a pullback. Perhaps some weather-related issues as well that might be affecting that. We then have something called the ISM non-manufacturing PMI in the United States. To you and I, that means service sector. They have used a slightly longer phrase where a service might have been better. So the non-manufacturing or service sector, 55.1, remaining quite steady from the previous months. For all you oil traders, put that in the diary, 3:30 on Wednesday afternoon. Crude oil inventories, obviously it has a big impact on the market, where crude oil had an astonishing move last week. Can't say it wasn't expected. No one quite knew when we'd have that rebound, but Brent crude was up $3.70 or just under 12% last week. So will be very important to see that number and see whether the recent move is sustained. We then have that second speech from Mario Draghi this week on Thursday morning, due to speak at the Deutsche Bundesbank lecture in Frankfurt. Again, it can affect the markets. And then the main event for us sterling traders for the UK markets, we've got the sort of triple report of the BOE inflation report, the rate decision minutes, and then we have a Carney press conference afterwards, just to make it even more exciting at 12:45, hearing Mark Carney tell us what's going on. It's adopting a slightly more dovish stance, so a lot of the forex traders, sterling crossers, will be very interested to hear what he's got to say, as indeed the FTSE and the UK gilt market will as well. Friday, we have the main event, as discussed or mentioned at the beginning of this piece. It is the non-farm payroll situation, the unemployment data from the United States. It's key for markets and for the Fed for future rate decisions. A little bit of a pullback in job creation following last month's strong data, which is not surprising, expecting 192,000. Weather also impacting the data, perhaps, as following all those snowfalls, etc. So there may be a bit of impact there. And looking for an unchanged employment rate at 5%. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.